All right, good morning. Good morning to everybody. We're going to go ahead and get started here. All right, for you guys who joined me for the first time, good morning. Good morning. I am wonderful. How are you guys? Hope you guys had a good week and starting to enjoy this weekend. It's kind of hot over here in Maryland this weekend. It's going to be up to around 100 degrees or plus. So I'll probably be staying inside as much as I can. All right, let's get started with this week's market action. But before I do that, got to do some housekeeping. So, I am not a financial advisor. I'm not a stock guru. I don't have a crystal ball, so I cannot predict the future. No one can. They only offer possibilities or probabilities. No one is 100% correct 100% of the time. No one is perfect. I am a longer term momentum trader looking for possible momentum build up in one direction or the other, coupled with unusual option activity and a good chart setup. Remember, the trend is your friend. Take a little from everyone and develop a method that works for you. I'm always looking to limit my risks. Don't bet it all on what you cannot or don't want to risk. Remember, this is trading, not investing. Should seek a financial advisor or investment firm for investing advice. With that said, let's dig right into market action. We're going to start out today with Dow Jones as usual. So looking at current action of the Dow Jones, even with all the back and forth this past week, the Dow Jones and the S&P are attempting to follow or do what the Nasdaq did already, which is march out to new highs. It's trying, but it's in a struggle right now. So we'll see if it's going to be able to do the same thing. But right now we're still hovering just below market action that we fell below several weeks ago, around about June 8th. So we're still trying to get above this level here. Heading into the summer months, that can be kind of tough, but we'll see. If they can also follow same type of action that the NASDAQ did and bring out to new highs. So we'll see how that pans out. Um, Getting above 29,568 would take the Dow Jones to new highs. So we'll see if it has enough power to do that this summer. And looking at our daily chart of Dow, right back above major moving averages, hovering just above the 200 day. So that is a positive movement within the Dow Jones, especially going into this earnings season. And closed pretty good on Friday. It struggled throughout the day, however, pretty much stayed flat, which is not a bad day. So overall, wasn't a horrible week for the Dow. I want to take a look at the Nasdaq in particular. All right. One thing I've noticed with the Nasdaq is that you know how the Nasdaq has been the outperformer for a while, and it's been just marching to new highs. Started to show some weakness over this past week. So that's part of it's mostly the tech sector. Started to show some weakness on this past week, and it's been running up for a while. So we may be in store for some rotation within the market. We'll see how that pans out. But there was some weakness in Amazon this week, weakness in Netflix at the reported earnings. So I would not be surprised to see some more rotation throughout this summer. Let's take a look at the S&P. So S&P also similar to the Dow Jones, look like it wants to march towards new highs, slowly but steady. It's been trying its best to march towards new highs. So we see how it pans out, and I think that's another part of sector rotation this summer. So a nice move up, holding steady, attempting to head back towards new highs. If the S&P gets above 33.93, that would take it to new highs. So we see how it pans out, and right now it's still looking strong, and it's still in the midst of this earnings season. Now for the one of my favorite positions to follow over the past couple of years is gold. So even though gold it pulled back a little bit from that 1830 high that we reached at one point, still above 1800. Dropped below 1800 a bit this past week. However, each one of these, this I'm looking at the weekly chart right now, and what you'll notice is that even though it has some pullback this week from the past week and a half from that 1830 high that it hit, each week it closed higher week before last, and closed higher last week as well. Each one of these candles represent an entire week, and because it's green, it just lets you know that this week that we just ended closed higher than a previous week. So that's what I normally look for towards the end of the week, is that we still close higher than the previous week, which keeps that trend intact. So the upward trend and upward momentum in gold and silver is still standing firm and still holding its course. So that is the weekly chart of gold. Here is our daily. So we've been kind of in this range for just a little bit over this past week. This is the range we've been in, looking to get above the 1830 level. So that's the mark to beat right now for gold in the short term, is to get back above the 1830 level and close above that level by week's end. So hopefully we'll see if we can get that done next week. So that's something to watch. Gold could stay within its range, stay above its 50-day moving average. That'll be good for gold, short term and longer term. All right, with that said, going to review or take a look at some of these stocks that reported earnings this week, just to get a general sentiment of market action. In general, we'll take a look at Netflix in particular and Amazon. Reason being, by them being part of the NASDAQ, and normally the tech sector has been keeping the market alive for quite a bit. When Netflix reported earnings on this past week, it kind of like stumbled because of the numbers weren't great or weren't up to par with overall analyst sentiment. So they did not hit certain benchmarks. And what happened? Um, Netflix pulled back. So it was as high as 575 at one point, and at the end of the week, traded down to 492. So that is a big pullback in the Nasdaq. That could be a sign, a signal to come for the tech sector. So we'll see how it pans out. So we want to pay close attention to that. Tech sector could be looking for some pullback, and so we could see some sector rotation continue this summer. Same thing on Amazon. Amazon pulled back all week long. So there could be some sector rotation occurring within the tech sector. And one thing to keep in mind, I think Amazon has earnings coming up soon as well. So I'll be paying close attention to these some of these tech sector positions as they start to report earnings to see how well they hold up against um, earnings reports. Apple is the only one that seems to be attempting to hang in there. However, it does still show some weakness within its technicals as well. So we'll see how that pans out over the coming days or so. One sector in general that I've really been paying close attention to, because even though the tech sector seems to be showing some weakness, the semiconductor sector is telling kind of a different story. What is Taiwan? So the Taiwan Semiconductor reported earnings on this past week. It was this past week, yes. And it had a pretty good report, and it stood strong and started a new uptrend, broke out to new highs. Then if you look at some of these other semiconductor stocks, they seem to be attempting to tell some of the same type of story. They're all been lagging within the tech sector itself, but they seem to be attempting to um, beat out tech in general. So a lot of these attempted to jump out to new highs. The Taiwan Semiconductor ETF, Taiwan Semiconductor already did it, jumped out to new highs after it reported, and it's still showing momentum to the upside. Micron is another one that seems to be setting up for a bounce off of its 200-day moving average, which would also take it towards new highs. So these semiconductors that's been lagging the market for quite some time are starting to look like it's part of the rotation. So we'll see how it pans out. AMD as well. All of these semiconductor stocks, you guys, I've been paying them close attention to them over this past week, and they have all been starting to show some strength um, from major moving averages that they've been sitting around for quite some time. Take a look at Micron. Look at the weekly chart. It's been hovering right above its 50-day moving average for quite some time. TTM squeeze starting to show some strength to the upside, like momentum is building up to the upside. And Micron had recently back in, say, April, March, dropped below its 200-day moving average on the weekly chart. Got a huge bounce back up. However, it has not been as strong as the general market. Got a huge bounce back up above its 200-day moving average and just above its 50-day moving average. And it's been hovering there for quite some time, using that 50-day moving average as an area of support. And it's been holding it pretty well. Now, I was going to get to AMD when I go to my portfolio, but since we're talking about these semiconductors, let's take a look at that. AMD is another one. Now, AMD has been trading within its range for a very long time. Now, it has upcoming earnings. And normally I don't like to hold to earnings. Anything is possible. However, because of this range that AMD has been trading in, I have a small position that I'm willing to hold through this because I still have, I want to say, over a month left to expiration. If AMD breaks out above $60 prior to earnings report, more than likely I'll be shaving this position in half and riding the rest through the report. I believe a lot of these semiconductors, including AMD, are going to break out of these ranges that they've been trading in. We already saw it with, let's say, Taekwon Semiconductor. We've seen it with XL and Exit. This one done it yet? So Xilinx haven't done it just yet. However, Xilinx also sitting in a very, very good spot, just above major moving averages, the 50-day moving average. So with that said, I'm a firm believer of these semiconductors. I think they are going to continue this break out of these ranges that they've been trading in for quite some time. So with that said, we'll go straight to my current portfolio. All right. So GLD, vertical call spreads in GLD expiring August 21st. Into this trade on June the 26th. Bought the 167 strike calls, so the 172 strike calls against it, paying 171 for the spread. Break-even point expiration is 168.71. Maximum profit potential 329 for contract. First target goal, see if GLD can reach 172. And then right after I purchased that one, because I got a strong good gut feeling about the gold and silver sector in general. Turn around and bought some more GLD. So with the GLD second position I entered, also expires in August. This one I ended up entering on July the 2nd, buying the 167 strike calls, selling the 171 calls against it, paying 154 for the spread. Break-even point expiration 168.54. Maximum profit potential 246 per contract. First target goal, see if GLD ETF can reach 171. Let's take a look at the GLD ETF now, see where we're heading or where we're at now. What do you know? We're already above 170. So it's been traded above 170 a couple times. So now, let's see. It's like there's still more room to run in the gold sector. So looking at our monthly charts, gold has still just been marching higher slowly but surely. And it looks like it has the ability in the near future to possibly get up to at least 180 for this GLD. I think 180 would be a good price target for the GLD in general over the next couple months or so. So it's continuing its uptrend. So I'll continue to hold this position. Pan American Silver, PAAS, ended up buying the 35 strike calls. The spread that I was in ended up closing that one out last week at the beginning of the week for a nice profit and continue to hold this 35 strike call option. And this one expires August 21st, 2020. Into this trade on July the 9th, 2020. Break-even point expiration for this one is 37.25. Ultimate goal is to see if the stock price can reach $38 before expiration. Let's see where Pan American Silver is now. So Pan American Silver is just, even with the little pullbacks here and there, overall, it's still in an overall uptrend. And I don't see that trend dying anytime soon. So on all pullbacks, it just seemed like they just end up being temporary. So it's in a nice strong uptrend. It does have earnings coming up on August the 5th. So we'll see what happens between now and then. A big jump above 35 would make me close out before earnings report. So as you can see, this is the daily chart. The upward trend is still intact and has not changed directions or momentum just yet. So the momentum to the upside is still standing firm. Newmont Mining for vertical call spreads in Newmont Mining expiring August 21st into this trade on June of 26th, buying at 60 strike calls and selling at 70 strike calls against it, paying $2.98 for the spread. Break-even point expiration 62.98. Maximum profit potential for this position is 702 per contract. First chart goals is see if Newmont can get to 70 and have another Newmont position. Also, this one expires September. Into this one on July the 7th, buying a 65 strike calls, selling in 75 strike calls against it, paying $2.40 for the spread. Breaking point expiration 67.40. Maximum profit potential here 760 per contract. First chart goals see if Newmont can get to 74. And let's see where Newmont is now. It's been recently consolidating. So just sitting back, waiting patiently. Sometimes when you get in certain positions, you have to be patient if you are looking for a move to a certain area and the trend is still intact. So with all these gold positions, even though there have been some pullbacks, the trend, overall trend has not changed, not one bit. Looking at Newmont, if you guys follow me for the past couple of weeks, you know there's been a trend line that it's been following since this pullback from 69.13 back in May. It's been at the lower end of this trend channel, and it's been constantly moving higher. So we'll see how it pans out. What I really would like to see is a move back up towards the upward trend line before the summer's out. If we get that pop, these positions will be extremely profitable. So that's what we're hoping for and banking for. Looking at the weekly chart, you can see a little bit better here. Been hovering right above the trend line, the lower trend line of this channel. I'm looking for a pop back towards the upper trend line of that channel. And what catalyst is coming up that can help it get to that point? It has earnings coming up end of July. So hopefully that's the catalyst to help get it towards that upper trend line, either before earnings or maybe sometime after earnings, which is why I jumped out to September expiration, just in case near term there's more volatility. But right now, overall trend is still up. The trend is your friend. KGC. KGC bought the 8 strike call options expiring in November the 20th to be exact. Break-even point expiration 875. First target goal to see if KGC can get to $9 before November. Let's see what KGC is now. What do you know? Uptrend still intact as well in KGC. Looking at our weekly chart, it's also been in a strong uptrend. Healthy pullbacks over this sometime throughout this year, and with the resumption or the resume of the uptrend in general. Also has earnings coming up on July the 30th. This one I haven't gotten a chance to look at this monthly. I want to take a look at this monthly. So this is where KGC is on the monthly chart, which is pretty good. Hovering right at its 200-day moving average on the monthly. So it needs a catalyst to get that big push above its 200-day moving average on the monthly. And if it gets that, there's nothing stopping KGC from really having a big move throughout this year. So hopefully it has a great earnings report. If it does, I mean, KGC can really start to rip. If as soon as it gets above the 200-day moving average on a monthly chart, this thing can really start to rip. So I'll be holding this one for quite some time. This is KGC. All right. AG still holding AG silver position. With 11 strike calls expiring August 21st. Into this trade on July the 9th. Break-even point expiration 1188. First target goal is see if stock price can reach 13. Where is AG at lately? And again, folks, silver is still the laggard, believe it or not, even though it's it's hanging in there, but it still has not really broken out in a big way, unlike gold has. If you look at the monthly chart on First Majestic, silver was still hovering just above the major moving average on the monthly chart. So this one still has a lot of potential. A lot of potential still waiting in the winds for these silver stocks. It's like we're right at a level of resistance, like it's been hovering right around this $11 level for quite some time. We get a big push above here. You can see 12 in no time and eventually take out that 1269 sometime this year. So overall trend is still up. The trend is your friend. If you're like me, when you get in some of these positions, um, if you don't pay attention to the short-term noise, the positions will work in your favor. You have to give yourself time for them to work out. What a lot of people end up doing who are, in and out of positions, when they see these red days, this is the daily chart. Each one of these red candles represent a red day. That's down day. A lot of people tend to just sell their positions, jump out because they think the floor is falling out. You got to put in perspective that stocks don't go up in a straight line. They do have red days sometime. And as you can see, we have red days here over the past couple weeks or so. However, price action did not drop below major moving averages, and it also stayed within a range. And then if you look at the weekly and the monthly charts, you also see that the upward trend is still intact. Unless we start to violate and start to create lower lows on the weekly and the daily charts, then we have an issue. But right now, there's no issue. We are still within a range. Weekly and monthly charts still show uptrend. You just have to allow yourself time for this to play out over time, because you will have red days, you will have red hours, you will have hours where there's it seems like the floor is falling from beneath you. At that point, you need to look at the longer term charts to see if you still have enough time to hold your position in order to get the overall gain, because nothing goes up in a straight line. All right, let's see here. Yep, we will. Let me get through all these and then we'll take a look at that one next. The SLV ETF. So SLV, 17 strike call options, expiring October. Into this trade on June the 30th. Break-even point expiration 1828. Unlimited profit potential. For the SLV ETF, we're looking for price action to reach at least 19 bucks before October. Let's take a look at that. SLV ETF. Same thing. Silver in general is still attempting to break out from a long-term area of resistance. So it's going to battle up here for a bit until we can get this break. If you look at the silver monthly chart, it looks nothing like gold. However, it is making a strong case to break out in a big way, right back at an area of resistance. And I'm looking for this silver to probably be probably a bigger breakout this year, the rest of this year, than gold, because gold has already started its breakout, which started about a year and a half ago. So silver is the laggard. I'm looking for silver to continue to build up strength and continue to break out to the upside. So we'll see how it pans out. 1835 looks like the goal to beat, which we reached that level back in September of last year. It's like we're trying to battle with that level again now. So that's the SLV ETF. All right, a new position I entered was FEYE. Been watching some of these positions such as FEYE, which is bear with me 1 second, folks. So fire.com. So there've been some breaches lately that's causing some of these stocks like FireEye to get a closer look. And FireEye has been showing a lot of unusual option activity lately. So looking at our weekly chart on FireEye, hovering just below major moving averages on the weekly, which is where I like to see price action, especially since it's been getting to move up gradually from March up to now. Around March, it was trading as low as 754. Now we're back up to around 13 bucks a share. Is that if that trend continues, we can see a good move higher throughout the rest of this year. So Fire ended up picking that up recently and ended up buying call spreads that expire September 18th into this trade on July the 17th, buying the 13 strike calls, selling the 17 strike calls against it, paying $100 for the spread. Maximum profit potential, $300 a contract. First target goal is see if FireEye can reach 16 bucks. And so right now the trend is still higher, and I think it also has earnings coming up July 28th. So we'll see how that plays out. AMD already went through AMD. AMD is still looking to break above that $60 mark. So I'm still holding these positions. I still have AMD. Both of these expire August 21st. Into this first position on June the 30th. The second position ended up entering on July the 6th. First position ended up buying the 52.5 strike calls, selling the 57.5 strike calls. And the second position ended up buying the 55 strike calls, selling the 60s. So basically, I'm just looking for a good pop above 60. And hopefully AMD can get to that point. Again, it's been trading within its range between 55 to 60 for quite some time. So we've got a bounce from the lower trend line back at the end of June. Made it back up to the upper trend line again, got another rejection. So now it's about 1, 2, 3, 4, or 5 rejections so far. It needs a catalyst to get above this level, and I think it may just have to be earnings. So we'll see how that pans out. So we're still above the lower trend line, but right now we're hovering right around the upper trend line. All right, the TLT still holding this one. As we go into these summer months, we could probably see, like I said, some volatility within this market, especially with these earnings, and then the market's been running pretty hot or pretty strong over the past couple of months. So hold on to this TLT as some protection as well. So TLT ended up buying a vertical call debit spread, expires August 21st. Into this trade on July the 13th, buying a 167 strike calls and selling the 172s against it, paying 156 for the spread. Break-even point restoration is 168.56. Maximum profit potential 344. First target goal is to see if TLT can reach at least 171. Let's see where the TLT is sitting now. So TLT is still hanging there, showing some strength. It's been in a tight range for quite some time, but ever since I would say June 5th, it's been in a slow and steady uptrend. So it's been in this nice, slow and steady uptrend for over a month now. So my goal is that it stays within that uptrend and continue to stay above the trend line. So we'll see how that pans out. It's doing holding up pretty well for now. So that is TLT. TTOO. This one is a biotech play. I had a friend of mine that reached out to me probably about 2 months ago, or about a month ago, about this about TTOO. Asked me if I heard of it. Said I have not. When I started to look at the chart and seeing some of the price action, this is pretty much like a bet. Betting on it does like some of these other biotech stocks have done. Get some pops here and there. And this one has been showing a lot of unusual option activity with this 2.5 call. And I've been watching option activity in this every week. And every week, it's like every day, they're constantly buying these 2.5 calls. And this has been going on for a couple months now. So there's a lot of bettors that's betting this thing is going to pop up 2.5. Anytime you have consistent option activity consistently, day in, day out, um, I like to pay attention. So this one I've been paying close attention to. Ended up deciding to jump in there as well. But the 2.5 strike call options expire. The first one expires in August 21st. Into this trade on July the 14th. Break-even point expirations 280. So this is a straight call. First target goal is see if it can actually reach $3. So that's what I'm looking for on both of these. So let's take a look, see what TTO is right now. This one has because it's one of those volatile positions. So it has wild swings. One day maybe up 9, maybe up 10%. Next day might be down 8 or 9%. But the overall trend, if you look at the longer term charts, is higher. This is a daily chart. It had a nice bounce from its 200-day moving average around July the 8th. Got up to as high as 226. Huge reversal. Got up to high as 226. That was back on July the 1st. Huge reversal. But look where it rested at, right at its 200-day moving average. So that keeps the overall uptrend intact. So when it got back towards that 200-day moving average, it was time for me to pay close attention and put some skin in the game. Look at our weekly chart. It's just been on a consistent uptrend. So each week it's just been finding a way to close higher. So this uptrend continues. That next move back towards this 100-day moving average could give a nice pop above it. So got plenty of time for this to play out. And it's a very inexpensive position, so it's well worth the risk. I don't mind risking a couple bucks with a chance to make a lot of bucks. So I'll hold this one for a while. All right, CGC. Also notice that this marijuana sector has been getting some attention lately. The marijuana ETF MJ has been showing like it's been basing for a while, and looks like it's starting to break out of that base. So CGC is one that I've always followed for a while. So ended up getting into this one also, buying a vertical call debit spread expiring August 21st. Into this trade on July the 13th, buying the 17.5 strike calls and selling them 20 strike calls against it, paying $85 for the spread. Break-even point expiration, 1835. Maximum profit potential is 165 per contract. First target goal is to see if CGC can reach $18 before expiration. So where is it now? So it's kind of it kind of showed an inverse head and shoulders pattern, which is normally a bullish pattern. Uh, Nice big break towards the lows back in March. Now we're back up above a certain level. So to me, it looks like a nice inverse head and shoulders pattern that's been forming in this position. And if you look at a weekly chart, we're now hovering just below major movement averages again. So it looks like the marijuana sector has been basing for a while. It started as base back in November last year, and it's just been in this range, overall range, almost a whole year now. So I think it's about time for it to break out of this range. We'll see how that pans out. All right, HMY, very volatile. Uh, One of the gold miners, very volatile. But if you can withstand the volatility within this one can be very profitable. So HMY ended up buying the 6 right calls, expire August 21st, into this trade on July the 10th. Break-even point expiration of 665, and looking for price action to get at least to $7. So let's see where HMY is now. Yeah, so this thing is very volatile, but when it pulls back, it normally finds a way to make a big jump. So this one is it's just been a monster. So got a nice pop on Friday, 10%. So I'm looking for this thing to really get to $7 before expiration. So still popping on the weekly charts. Monthly chart, just getting started. Finally got above the 200-day moving average on the monthly chart. Finally closed above it. So that's a good sign for HMY. So let's see if this trend can continue. All right, what else we got here? Okay, last one in my portfolio, STM, which is also another semiconductor stock. Ended up buying the 35 strike call options, would expire August 21st, into this trade on July the 14th. Break-even point expiration is 35.60. Looking to see if STM can get to $36 prior to expiration. So this is another one. Overall uptrend, still in. Nice pullback back in early part of this year. And we dropped down to as low as 1530 and been an uptrend since then. So hopefully looking for this uptrend to continue. Price to beat 31.98 in the near term. And say the trend is your friend. This is still an overall trend heading back towards 31.98. All right, so now let's take a look at some of what you guys are posting here. NOC. Okay, this is one of the defense names. It's like this is looking for direction. This one has earnings coming up. And I probably would not be willing to stay in here with the earnings. Only reason being is that it looks like it's been attempting to trend downward since it made this high up around 385. So I would be more of a sideliner until after it reports earnings to see if it can get this bounce off of this 50-day moving average. Kind of don't like this pattern what I'm seeing in the monthly chart. So I'll just be a little careful here, see if we can get that bounce on a 50-day moving average on a monthly chart, because it's been trending higher for quite some time, for many years. Um, it could be about to take a break or could get a bounce here. I wouldn't trust it um, just yet until earnings can prove itself after earnings. All right, so RVLV. Now, this one looks like a bottom fishing play. I like this a little bit better. So let's take a look at. So the monthly chart shows it's been attempting to continue its rebound from this pullback right up against the major moving average. So anything is possible when you get there. Um, right at this 50-day moving average. So a good pop above for this one, a good pop above the 18 bucks would be a good catalyst and push it up towards that 100-day moving average. So it has earnings coming up. Always want to play it safe when you're still hovering below major moving averages on a weekly and a daily. All right, so what's it? VICI. This one looks like a recovery story. Just looking at a quick glance at the chart already. So kind of had a good pullback with the rest of the market early this year, and it's been in an overall upward trend. Looks like it has found an area that has been trading in a range that is looking to break out of to continue an uptrend. So this one looks like it's still in an uptrend. It's been forming a nice base since it has this big pop back above major moving averages, and we're hovering right up at the 50-day moving average on the weekly. Looks like it wants to continue that move after it finishes its base. So like it's forming a base and like it's ready to continue a move higher. All right. Baba. Okay, Baba also, just like Amazon, Netflix, those tech stocks had a big pullback. Well, not a big pullback, but it had a decent pullback on this past week. Baba is still trading above major moving averages and still trading above a longer term trend line. So we have to see how that pans out. Had a decent move. It's probably time for a little break here there. Um, a move back towards, if it falls any further here, especially if it gets towards 235, that'll definitely be a good place to re-enter. But you got to see now. Looks like it's attempting to start a consolidation area, and with the tech sector taking a breather, I wouldn't doubt if Baba decides to take a breather as well. So got as high as 268, pulled back towards 240. So it's in its range. Just pay close attention and see if it can stay in that range and continue to build up a base for another move. Yep, you guys welcome. Yep, BTC. What is BTC? Not sure what that is. Is that Bitcoin? Are you a Bitcoin watcher? All right, Bitcoin has been stuck in a range also for quite some time. So it's been in this range since around about May, and it's still in this range, still trading above major moving averages on the daily. So still range bound. A good push above 10,000 could send Bitcoin a little bit higher. So still in this range. It's been in this trading in this range for a long time. Not sure what it's going to take to get out of that range, but it's range bound right now. But if you see it creep above 10,000, that means it's breaking out of that range. All right. Anything else, folks? Because I am ready to enjoy this hot weekend. Hopefully, you guys enjoy the rest of your weekend. I'm going to go ahead and try to relax for a little bit. But before I do that, we will take a look at Upwork. UPWK. PWK. Okay, UPWK in an overall uptrend. And on a week, that's why I say I always pay attention to the weekly and monthly charts just to see if it's running into a huge area of resistance. And as you can see, it sure did. On this weekly chart, it defines these areas of support resistance real strong. As you can see, the first move on Upwork, when it got above the 50-day moving average, look what happened. So back in May, got up above this 50-day moving average, ran into the 100-day, and that acted as a strong area of resistance. It pulled back. One good note for this one is that it pulled back, but it did not drop below the 50-day moving average. It started hovering between the 50 and the 100-day. And it did that for a couple months. It's like got a big break above the 100-day moving average, but it ran into strong resistance at the 200-day. So that's what's going on with Upwork right now. It's stuck in a range. It's stuck in between the 100-day and the 200-day. If this thing continues to pull back towards the 50-day on the weekly, I would take note and just be prepared because there's a catalyst coming up that can help it continue this uptrend. Longer term picture, it's been in an uptrend and it's still in an uptrend. So it's been in this uptrend ever since beginning of March, and every time it reach these major moving averages, it's just been having some problems. Not really problems, but it's just running into an area of exhaustion where it normally takes a break. See, right now, Upwork is taking a break, took a huge break last week, even though it's in its longer term upward trend, hit a major moving average on a weekly chart. The 200-day moving average is normally a major area of resistance or support. When you go to challenge it, sometimes you get that rejection first before you overcome it. Last time it challenged a moving average, the 100-day, you can see how long it took for it to get out of that range. It challenged this to 100-day back in May. It didn't break out of that range. So challenged it up around May the 18th, didn't break out of that range until June the 22nd. So it took a whole month to get out of that range. And where is it at now? Right at the 200-day. Will it take a month to get out of that range? Who knows? But the overall action is still on an uptrend. Got to keep that in mind. Yep, last one. All right. You guys are very welcome. Thank you very much for the accolades. We try to do our best. You're very welcome. All right, folks, just keep in mind, always remember, trend is your friend. Look at the bigger picture a lot of times, especially within this, there's a lot of volatility going on. And give yourself time for things to work out if a longer term trend is showing you something different than what the shorter term noise is showing you. And if you got some gold in your portfolio, silver in your portfolio, great. Don't worry about the short term noise. A longer term noise in gold and silver is just saying that it wants to rip roar higher. I think in gold, if we can get above 1830 and get towards 1850 would probably be a good place to start taking some profit if we can get to that level. But overall, it's going to be a strong year probably for those metals, especially going into this election. So, all right, folks, enjoy the rest of your weekend. I will catch you guys next week. I am still working full time, so I will be back in the saddle on Monday working, but I will be around when I can, and I'll be watching these gold and silver and everything else very closely. Yep, I will throw the replay link here in Twitter as soon as I get off of here. get things settled. And enjoy the rest of your weekend, folks. Um, if you need me for anything, just drop me a line on my Twitter. Also, for you guys who have not done so already, feel free to find me on Twitter. My personal Twitter, and if you guys have not requested to be a friend yet, it is as simple as you guys who can't find it. Let me see if I can find it real quick. So if you want to find my personal Twitter page, it's just at Bullish Bears Tim, and request to join. I will gladly accept you since you are one of our members. All right, folks. Until next time, it's Tim Davis from the Bullish Bears team signing off. Have a great weekend, guys and ladies.